Ever wondered why buying a home in Australia feels like trying to catch a shooting star? What's the secret sauce behind soaring house prices, even as our wallet cries for mercy? Picture this: average homes hitting 7 figures, rent prices skyrocketing, and a housing affordability crisis in full swing. But why? Amidst all this chaos, are property rates expected to keep dancing skyward? Imagine gazing at a typical home in Melbourne, envisioning a cozy haven for your family. But hold on, it is now playing hard to get with a 7-figure price tag. The affordability puzzle in Australia, especially in bustling cities like Melbourne and Sydney, has everyone scratching their heads. It's like a tag team match between average household incomes and skyrocketing property prices. Why is owning homes starting to feel like a distant dream for many? The struggle between your paycheck and the dream dwelling is real, and we're about to untangle the perplexing web of this affordability crisis. In recent times, the average home price in Melbourne hit $1 million, while Sydney boasts an average of $1.4 million. An astonishing leap, but the real conundrum lies in the dance between the cost to own a property and household income. Think of it this way: to snag that $1 million Melbourne home, you need a hefty $200,000 deposit and commit to a 30-year mortgage with a 6.5% interest rate, costing you around $1,200 per week. Now, compare that to the average household income of $1,900 per week. The math leaves many spending over half their earnings just to claim an average home. Hold on to your seat as we explore the intricacies behind these jaw-dropping numbers, revealing the layers of this affordability enigma. Let's peel back the layers beyond the glittering facade of house prices. It's not just about the jaw-dropping digits, it's a tug-of-war between what you earn and the ever-climbing mortgage rates. The burning question lingers: what's propelling prices in this rapid descent? And what's steering this upward trajectory to the foreseeable future? Well, it's like this. Owning a home is akin to entering a financial battleground, where your income competes against skyrocketing interest rates. As we navigate this complex real estate terrain, we'll uncover the driving forces behind the seemingly unstoppable rise in property prices. So, buckle up as we unravel the financial dynamics that extends beyond the surface, providing insight that might just reshape your perspective on the real estate market. Stay tuned for an exploration into the intricate dance between income, mortgage rates, and the elusive concept of housing affordability. Picture this: while we often chit-chat about the soaring cost of groceries and energy bills, there's a silent storm brewing in the housing scene, especially for renters. Hold on to your hats, folks, because renting has become a wild ride. In just 2 short years, renting costs have skyrocketed over 40%. It's like a hidden force behind the scene, quietly but significantly driving up inflation. Now, you might be wondering, how does this impact the bigger picture of housing in Australia? Well, it's more than just a ripple effect. It's a tidal wave reshaping the landscape. As rent prices shoot up, it's not just about finding a place to live. It's about the economic dance between supply and demand, the intricate ballet of home prices, and the drama of construction and inventory. So, as we navigate this rollercoaster of renting, keep your eyes peeled for the twists and turns that have far-reaching impacts on the entire real estate spectacle. Now, let's zoom into the pandemic's economic rollercoaster that shook Australia's real estate landscape. Picture this: interest rates on a wild descent, reaching historic lows thanks to the COVID-19 ripples. But as fate would have it, the Reserve Bank of Australia played its cards, and the ride took a sharp turn. By mid-2022, interest rates shot up like a skyrocket. How did this impact the real estate tango? It's a tale of twists and turns. Imagine mortgage rates that once danced at a low of 2.2% suddenly waltzing at 6.5%. That dreamy $1 million property you eyed? Well, its monthly payment soared from cozy $3,000 to a hefty $5,000. Brace yourself with the unexpected dance between interest rates and house prices. The ripple effect was swift. Property prices stumbled, especially in Sydney, taking a nosedive by about 8% between February and August 2022. This turbulence extended its reach to the construction sector, where fewer dared to venture into the shaky market. The domino effect hit the inventory quadrant, leaving home seekers with fewer choices. Meanwhile, in the rental realm, the cost surged by over 30% in Melbourne since the pandemic's onset. So, how did a mere fluctuation in interest rates set the real estate symphony off key? Buckle up, we're about to unveil the complex choreography of Australia's housing market dynamics. Introducing the DW Real Estate Model, a masterpiece created by Denise D. Pascal and William Wheaton in 1992. Imagine it like a roadmap guiding us through the intricate world of real estate. It's composed of 4 graphs, seemingly complex, but let's simplify the magic they hold. First, we explore the rental market, the EBB and flow of prices based on available houses. More homes mean low rent, while scarcity pushes prices up. Now, shift gears to the property selling market, where house prices dance to the tune of rental income. Higher rent translates to pricier properties. Next, the construction industry enters the scene. Increasing house prices signal an opportunity, prompting more construction. Lastly, the inventory graph ties it all together. More constructions equals more available houses. Picture this, a ripple effect where each quadrant influences the other. But here's the twist. A shock in one quadrant sends waves across all fours. For instance, the recent surge in interest rates triggered a domino effect. Mortgage costs skyrocketed, property prices took a nosedive, construction slowed, and inventory dwindled. Result, rent prices shot up. Melbourne witnessed a 30% surge in rents since 2022. The DW real estate model is our lens into the interconnected dance. Ready to decode the secrets it's hold and understand how one change can send shockwaves through the entire market? The plot thickens as we delve deeper into Australia's real estate puzzle. As we ride the roller coasters of interest rates and property prices, the DW model, a beacon in the realm of real estate, initially suggests a simple correlation. Higher rates should mean lower property prices, right? Sydney's 8% dip in 2022 seemed to align with this logic. However, just as we thought we had it figured out, the script flips, and prices skyrocketed to new highs. It's a puzzling twist, and we're left wondering, what's really at play beyond the interest rates rollercoaster? The narrative isn't as straightforward as the model implies. There's a mystery lingering, waiting to be unraveled. A code that goes beyond the surface-level impact of interest rates on property prices. What's steering this market may be more intricate than a simple cause and effect scenario. Imagine Australia City, particularly Melbourne, acting like irresistible magnets, doubling their population since 1971, and set to welcome another million residents in a decade. This population boom isn't just a mere statistic, it's housing market game-changer. The surge of people intensifies the demands of homes, turning the central business district into battleground for developers. The dilemma arises, vertical apartment buildings or sprawling suburbs. As the puzzle pieces fall into places, the housing market experiences a ripple effect. Higher demand raises rent costs, a trend that should typically trigger more constructions and lower prices. However, the aftermath of the pandemic disrupts the narrative, with construction costs skyrocketing by 30% and leading to the bankruptcy of major players. In the urban puzzle of housing, where more people usually mean more homes, reality served as a curveball. The conundrum lies in construction limitations faced by big cities. Here's the twist. The choice between building up, expanding the vertical landscape, and restricting development, causing a shortage of home and pushing prices skywards. Imagine the cityscape as a chessboard. The strategic moves determine the fate of the housing affordability. Dive into the intricacies of the construction conundrum with me. In a metropolis, the decision to build towering apartment complexes in previously serene suburbs versus preserving quiet neighborhoods dictates the supply-demand tango. It's a delicate dance with repercussions echoing across the housing market. The further from the bustling center, the more spacious the land, but also the challenges of accommodating a growing population. And there's the rub, meeting demand without sacrificing the charm of suburban living. The puzzle intensifies where urban developers grapple with the dilemma, embrace the rising skyline, or curtail development and risk a housing crisis. As we navigate the intricate world of Australia's real estate turmoil, the question remains, will the market find its equilibrium? Or are we in for more twists and turns? Your insights matters. So, let's keep these conversations alive. Don't forget to hit the like button if you've enjoyed our exploration. Share these videos with your friend facing the real estate puzzle. Stay tuned as we unravel more mysteries and decode the complexities shaping the real estate landscape. Your journey into the world of property awaits.